What's up, you guys? The market's down big again today. SPY's down 1.5%, Nasdaq's down about 2.5%. We have Tesla down about 2%. We had Meta come through with earnings, which we're going to talk about. Amazon with earnings and trading back down at 212. Tesla looks like if we break this, we will probably move our way down to 180. So I want to cover all of that as well as this harmonic pattern that is setting up on Tesla. If you guys want to follow my trades, go check me out on Twitter/X and also follow me on Discord. It's also an easier way to get up-to-date information because what I do is I post throughout the day over there, and then at the end of the day, we kind of recap everything that I was looking at and trading at here on YouTube. I want to also thank all of you for the support in yesterday's video. We had over 200 comments. All of you guys were waiting and watching till the end of the video, and I didn't realize that some of the things that I talked about in that video that I thought wouldn't be of any interest to you guys actually seems to bring up a lot of interest. And so I take all of the comments that you guys leave here to heart about different content you want to see and what you think is going to help you better as a trader. And so if you're part of the THT 1% Club, I want to say thank you so much. And if you didn't watch yesterday's video, I highly recommend it because we went through a lot. Now let's start by looking at Tesla, and we're going to start with the 4-hour chart. We're going to use a couple of indicators here. The first one, you'll go up to the indicators tab and you will look up smart money concepts, and the one that I like to use is going to be by Lux Algo. So we'll hit the favorite button here, and then we're also going to be using an Elliott wave detection by Lux Algo, or you can draw the Elliott waves yourself. Now, looking at this currently, we're going to turn off my harmonic detection so that we don't see any harmonic patterns, and it's a little bit easier for you guys to notice. I know over the past couple of days, a lot of people have been talking about the potential 212 level. I think the Chicken Genius even said that if he thinks it breaks under 212, it's going to go down to $69. The reason that this is so important is that this is our change of character level. And if you guys use the smart money indicator, or if you guys now are going to start using it, this is going to be something that you're going to want to keep an eye on. If we were to go back and look at a candle replay of May of 2023, you're going to see that we had this resistance level of about 208 to 212. This resistance is called the change of character when we break through it, basically meaning that when you push through the change of character or you push through the resistance with heavy amounts of volume, we're normally going to continue to run, and this is going to be a potential reversal. As you can see, this happened here. I have this obviously on a very fast replay, but we topped out up around here and then eventually pulled our way back down. As this resistance was very strong before at about 212, it's always going to act as a very strong support if we actually pull back down to this level to use it as a support. And so obviously over the past summer, we were trading up between this level of about 280 to 250, broke 250, and now this old change of character, it should act as a new support, which is what we're seeing now. And then if we break this change of character again, it's going to signify that we're going to move probably back down to 190 and that the trend will reverse once again. And if we move right now to our current time, you're going to see that we're actually trading back down at this change of character. So if I think that we're probably going to break 212 and move down to 180, why is 180 a specific level? First thing is going to be looking at order blocks or major levels of support. So now that we've taken all of these order blocks out between 230 and 212, if we break this area of support at 212 and hold under it, which is very important, multiple days closing under that level, then we'll probably move down to our next bullish level at 182, which is where we have a big bullish order block. Now, if an order block comes in over the next couple of days at 205, then we can take that into consideration to see if maybe we bounce. Now, something else that we have that's going on, another aspect that's bearish, is that we have 1, 2, and 3 fair value gaps. I talk a lot about these on this channel, but a fair value gap is basically a point in the market where a massive move happened, in this case up, and institutions didn't actually get the chance to fill. These gaps work like a normal price gap, meaning that majority of the time they're going to pull back and they're going to fill, meaning that Tesla will probably, and especially I believe if we break and hold under 212 and 200, we'll probably move our way back down to 189, worse down to 170, and maybe even 160 to fill these gaps. So this is the levels that I will be watching to the downside. Now, this also leads a lot of people to say, well, why did I think short term that we could potentially bounce back up to 230 or 240? And the reason for this is going to be the fact that we had this massive sell-off and accompanied by a fair value gap that occurred here. If we were to take the Fibonacci retracement, we go to this weekly chart and we're going to go from our swing high at 250.57 and we're going to go down to our swing low of 212.10. This lines right up at about that 233 to 240 level. And my thought pattern behind it is that we're going to see a dead cat bounce, which means that as the stock takes a massive drop, bulls buy it up, we get a little bit of a bounce, usually retracing about half of what that downward move is. And that's enough time, unfortunately, for market makers and big money to liquidate their positions and sell it to us, sell it to retail, and then let retail hold the bag until we move back down to like 160.